So let's get the data. Santelli standing by at the CME in Chicago and has the numbers on PPI inflation for us.
Well, Wilf, they're going to be coming out here momentarily. We're expecting a number up 0.3 on headline July producer price index. Double that, and you hit the mark. Up 0.6, up 0.6. This is a really aggressive number, much more intense than we were looking at. The last time it was higher than 0.6, it was up 0.7. That was like in the fall of 2018. Now, if we go through it and we strip out the food and energy, we're up 0.5. That's 0.4 bigger than expected. And we look at final trade month over month, it's up 0.3, also more intense than expected. So all these numbers are hotter. Now let's go year over year. Year over year final demand, we were looking for a number down 0.7. Half of that down 0.4. And do remember, the high water mark on the negative sides here was in April at minus 1.2 on this one. And if we look at year over year final demand with trade, that is up 0.1. So we can see that the year-over-year numbers are much smaller. That would make sense because the real rate of change, Wilf, is, of course, over these month-to-month numbers from March and April. So everything's a bit hotter than expected on producer prices. Of course, we're going to be anxious to see the consumer price index and see how that revs up a bit. At least for the moment, it's hard to get too hot on inflation, but there is going to be a chapter of the inflation book. It's just very difficult to predict when. Interest rates have ticked up a bit, 62 basis points in a 10-year, Wilf. So we're finally starting to outdistance that all-time low yield close around 51.